live.
Boom.
Hola.
Hello.
Hello. Good morning.
That's pathetic.
That's pathetic.
Having all the Latino friends you have, you only know hola.
Tom's a man of the world.
I really do only know hola. I mean, kind of maybe the few more words, but.
Buenos dias.
Buenos dias.
Notice my accent.
Yeah,
Buenos dias or buenos nachos.
Buenos nachos. Remember we tried to go to, what did we try to do when we were in Mexico City? We tried to see the wrestlers.
We tried to go Nacho Libre.
Oh.
The Nacho Libre.
We couldn't get in.
Which Nacho Libre, you've never seen the movie. Have you seen Nacho Libre?
Yes. Oh my God,
No, I've
it's
seen
hilarious.
the Nacho Libre.
You've seen it?
Oh, yeah, yeah.
It's so good.
So good.
I wanted to go to the actual.
We wanted to
Yeah,
go. You can't get it. It's like crazy. I didn't realize that it was a thing when I heard.
Yeah,
I thought it was just made up for the movie.
No.
And
No, it's huge.
We tried to get in. We even had connections.
we had connections we couldn't get in. That's
Wow.
bad. When connections can't get in, that's
Wow.
bad.
When you have connections in Mexico and you can't get into something,
That's bad.
it's bad.
That's bad.
That's a reason to go back to Mexico City and the taco.
I will say,
Oh, the food.
for those who haven't heard our Mexico City stories,
Amazing.
we had the best food
Amazing.
ever.
Amazing.
And the best tacos, not even, like, there's nothing in America you can even put close to it.
Cannot put anything close to it.
Yeah.
Totally agree. And what was the carrot with the ant, the ants on a log or whatever? That was crazy that we ate ants and
No, it wasn't
yeah.
a carrot.
yeah, it was a carrot, wasn't it? Delicious.
It was
And
a
they-
carrot, but it was rolled in.
And then the mole at the end, their main course was mole with no protein. It was just mole. And then
It was like
You're
crushed
making me
ants.
so hungry.
crushed ants.
And then I had the next day I had escamole, which is ant eggs
Wow.
on flour tortilla with a little
If somebody said,
escamole.
okay, let's see if you could do this because
What?
we were just talking about the level of confidence.
Okay.
If somebody, me, I'm going to ask you a question. Okay.
Okay.
You have to give an answer.
Okay. Go ahead.
Could you? Like I couldn't, but could you give an answer? What is the greatest meal you've ever had? Because to me, it's situational. So it's not necessarily just about the food. It's the people. It's the atmosphere.
Of
It's the
course.
moment. It's the But for you, you don't care about people. You don't care about atmosphere. It's all about you. So you're
Right.
thinking. You're working through it right now.
Well, I would say
Not in Italy, because Italy doesn't have a good restaurant.
no, not in the whole country. There's not a
Right.
good
There's not. We got it. No, not a good restaurant in the entire
restaurant.
country.
The entire country.
Go ahead. Could you say what the best?
I would
best
say
meal ever?
I would say in 2025.
Yeah. Go ahead.
There is no doubt that the best meal I had was in Mexico City, the tacos in Mexico City.
With me or the one before? You're going to say the one before just because I wasn't there.
Oh,
Here it comes. Because he had tacos
Well,
twice. I had them once.
it was the same, two different restaurants, but the same owner, the same menu, the same everything.
The one we had was a little bit fancier, a little bigger
It
menu.
really wasn't. They were like the
Which
same.
one? Okay, the same thing.
They were literally the same. But we had,
Okay, so you're giving 2025. Good answer. Actually, I think I could give my.
what is yours? Best ever. I have to
See, the
think about best ever.
But again, the best ever. Could you give a best ever?
No.
Because the best ever for me, it's just
Not when you're a
again,
foodie, you can't.
right because there's so much about right in the moment. But if you're gonna say the last year, or this year for this
Yeah, for
calendar
2025.
year, Lila and I went to the omakase room at Sushi-san. It was, I mean,
Where is that? In New York or here?
here upstairs. It's down.
No, I've never been there.
It's hard to get, but I could hook you up.
There you go.
There you
We
go.
should go.
It's a hard ticket to get. It was unbelievable.
On another trip to Mexico City, I had the taco omakase at Puyos, which
Oh yeah,
is
we used to
one
at
of
the bar.
Yeah, we sat at the bar. I had the taco omakase, one of the greatest meals ever.
Yeah, we didn't get that.
Delicious food.
Yeah. But anyway, I'm trying to think the greatest meal ever.
Like, do you even step back? If you had to say, what's your favorite pizza? If you had to say, what's your favorite steakhouse? Like, could you pick one and just say?
The greatest pizza I've ever had was growing up as a kid. It was going to
one in New
Pepe's.
Haven.
Yeah.
There you go. And
It wasn't even, nothing is even close.
see,
That's life changing.
which one did I go to? Frank's or I went to one of them. Pepe's?
Frank's is Frank Pepe.
Yeah, Frank Pepe. What's the other one then?
There's the Spot.
No, I went to
There's
Frank Pepe.
A pizza.
I went to that. I'm not in New Haven.
There's Modern. And there's a bunch, but one's called Modern, one's called Spot.
It was good, but it wasn't. I think it's what you grow up on. Could you in Ecuador? Did they have pizza in Ecuador?
Yes.
Any good?
No. Can't be.
Oh,
Different.
Here it comes. Domino's.
Can't be.
No. It's,
What was
I
it?
think actually there is Domino's now.
I'm sure there's
Because the
Domino's.
franchise is everywhere.
For sure.
I like Domino's.
See,
But
you're from Chicago. Like, you can't possibly like East Coast pizza. Like, it doesn't. I mean,
I like New York. I mean, I'll go to.
I understand. I like Chicago pizza more than New York pizza now. But
But I was there once for lunch right when they opened. It was good. It just wasn't like, I think I went in my expectations because you have talked about it for so long. But I think a little bit, because it's what you grew up on, it's the Peanuts cartoon where they have the chocolate chip cookie stand and it's chocolate chip cookies like your mom used to make her a nickel, and then chocolate chip cookies like you remember your mom used to make her a quarter. So,
yep.
right? It's how you remember it. So anyway.
well, I was up at 3:30 this morning for a CNBC hit. So at 4:30. So I had to make sure I got my
seriously, you're
hair done.
You get your hair done.
Actually, there was a pizza in Ecuador that had corn.
No,
As a
that's
topping.
why.
that's not. No.
And I know it sounds crazy,
No.
but
No.
I loved it.
No. That's why your vote doesn't count.
Yeah. No, I'm sorry.
Oh,
Have you had
okay.
chicken parm yet?
No, between yesterday and today, no.
You had plenty of time.
Where
You
do
could've-
I go? You
you
got to
could've
tell me
stopped.
where
You're
is
not-
the best place.
You're not
Because I'm not going to make it.
heavy.
Probably.
You don't have the right body for chicken parm to have a chicken parm.
What does that mean?
It's for fat guys.
Yeah.
Oh,
It's that's
Chicken
what he
parm
said.
in Chicago's. I actually like Art of Pizza and I like Nona's. They're both really good. And if you
I've
want
never had the chicken parm or pizza. I know they have the eggplant.
It's
well,
good.
maybe
Is
we
it?
can order on
the chicken
Friday.
parm sandwich or
chicken parm sandwich.
Yeah.
It's really good. And the chicken parm at Nona's is great. And then also at D'Amato's they do the vodka chicken parm, which is really good. Way underrated. It's really good. So
Okay. Well,
But-
now I know.
I don't see you standing on the street wolfing down a
big sandwich with like 20 napkins in your hand and tomato sauce.
dripping
just
it all
dripping
over
down.
yourself. I don't see that as you. It's not your thing. Walking outside D'Amato's and eating a sandwich on the top of your car. That's what I do.
Tomatoes On Grant?
Yeah.
Yeah, tomatoes
Oh.
and Bari.
Yeah.
I
Bari.
can do that. I mean, I can pick it up and then,
Or they both do chicken
Right by,
parm.
you're right
yeah,
there.
right there.
Yeah.
Yeah, you're right
You can
there.
stop at my flower store when you're there.
Just don't tell me no, Tom.
Yeah.
Okay, I won't.
But anyway,
Alright.
so I was up early and I did the CNBC hit, which is great. And then I had 2 breakfasts because I had nothing to do at 4:45 in the
The
morning.
fact that you're actually admitting this is impressive.
I know.
But
And
go ahead, because
live.
people now want to know, what were your 2 breakfasts? And there is, at the end of what you're going to say that you ate, there is the most important comment, but go ahead and say it, that none of them touched.
Guacamole and sushi and then oatmeal.
Guacamole, sushi, and oatmeal, and none of them touched.
No, they don't touch. No, you can't let you.
Separate.
How old is the sushi? Because you didn't get up this morning and get it.
What did you
when's
have
When's
first?
the
Oh, no,
sushi from?
I have a sushi maker in my house. I have a sushi chef.
You have a little guy?
Yeah, a guy. A good guy.
Oh my God.
I made him get up early. I have a full-time sushi
Okay.
chef.
No, he
I'll
doesn't.
go with it's from Costco or Mariano's, but I'm going to go Costco, and I'm going to say it's from Saturday.
yeah.
Where's it from and when?
I think it actually was more
Oh, God. This is
okay. Like
bowl.
Poke bowl. So it was
No,
from
not-
Costco for sure.
yeah, it was from the tuna, the spicy tuna poke from Costco.
You're not giving us the day.
Sunday. It's borderline.
Borderline.
It's got
That's when you open. This
You gotta-
goes back
you
to the
gotta spray
refrigerator
a little
question.
Bit of like Windex or something.
Well,
It's
this
got
is-
like
Sure
a
all the
couple. It's
bacteria's
got a couple.
gone.
It's still got a couple hours left on the due date.
Is this like you
God.
smell it, you look at it, and then you think about
You're
it,
like,
and then
"Ah."
you look, you're always looking, and you say, yeah, go ahead.
Well,
Wait,
I
so
mean,
what order? What was the order of?
well, you always go sushi first because it's the one that's going to expire first.
Okay.
Like I like.
Where's the guac from?
I get guac from my favorite's Mariano's.
Mariano's.
As I got a woman there
How
that
old was that?
Got a
a
woman.
couple days. But I get a person there that's been making my guacamole for like years. She's awesome.
She just sees you and she
Yeah, she puts an extra.
The Mariano's by out
Yeah.
a jalapeno.
near here?
No, on Ashland.
Oh.
She extra jalapeno.
Extra jalapeno.
Yeah, she does it perfect. Like,
Wait, Mariano's? Oh, yeah.
yeah, lots of.
That at Elson.
Yeah.
Lots of.
The problem with
lots
that
of jalapeno.
Mariano's for me is you got the garbage dump over there, so it stinks. Like in the summer, it absolutely stinks. You drive, I'm like going in a grocery store when it's right. Oof.
Anyway, that was my morning. So I've been up since 3:30. So I feel like, what time is it now? It's
least you had
10:10.
It's
you
10
had
to
You've been
like
up for
you had
7
a full
hours.
meal.
That's a
Oh,
long
yeah.
time.
yeah.
It is a long time.
Yeah, I've been up for 7 hours already. So
We got to make sure if there's anything we need, we got to make sure it's done before noon because he'll be sleeping by.
Right.
by like
so I was
2.
writing. So I was doing work, answered all my emails, writing stuff, and then I'm like, all right, let's get this show going. I was ready to do the show at 6 o'clock this morning. Now it's 10 after 10. Hey, if you're new to One Lucky Dog or to Lossdog, One Lucky Dog's our new show. Monday, Tuesday, Wednesday. That's how we're starting out. In a couple of weeks, we'll decide if we want to go Monday, Tuesday, Wednesday, Thursday. But right now, Monday, Tuesday, Wednesday this week, you can go back and watch the last 2 shows. And then next week, we will not be doing a live show on Thursday or Friday this week, but we will be doing the live show again next week, Monday, Tuesday, and Wednesday. We've got a ton of stuff coming up. We sent out an email yesterday suggesting that if you've signed up, you're going to see our software in a couple of weeks. And it's really important that you spread the word. I mean, the number of people that watch the show live or watch the show at some point during the day, it's really important to us because that's how we build up a following. That's how we build up an audience. That's how we eventually will, keep the lights on. Look at the size of these lights.
I know.
And I hope you're enjoying our new set. We're in Chicago on the north side, just a little bit west of Wrigley Field. And this is our brand new facility. We built out this entire crazy stage, and it's a massive space, and it's really cool. And we're trying to give you kind of a big view. I'm Tom Sosnoff, he's Scott Sheridan, she's Sol Espinoza, and the 3 of us go back at least 30 years together. So there's a lot of history on this stage.
I was 12.
You were 12, and we were 40. But there's a lot of history on this stage, and so we know each other well, so it's going to be fun. And you ready? Let's get to it.
Yeah.
Yep, and just before we get into it,
yeah.
phone lines will be open
Yes.
during the whole show, 312-448-7032.
Yeah, we know there's a bunch of people on hold right now, and we're going to get to you. But first, we want to get through our mailbag, and then we'll jump on.
Rundown of the show, real quickly.
No, let's do a mailbag. Let's see what we got.
Fine. Let's go right in. Mailbag. It is.
So this is just a couple of emails we got yesterday from viewers, and this first person writes, "I just found out you left Tasty and you're now at Lossdog. I'm a money manager in Mexico City." We were just talking about Mexico City. "And I loved following your trades. Will you still come back to Mexico City to speak and tell us about Lossdog?"
If tacos are included, the answer is yes, we're sending them.
Yes.
If Tacos 11,000, what was it called? Tacos 11,000?
Something like that.
I think it's called Tacos 11,000. As long as I can get in there, yes. No, of course, I love Mexico City. And actually, I also plan to go back to Guadalajara. We have a whole university there, Panamericana University, they have a huge training program there, and hopefully I'll have an opportunity to go back to Guadalajara, go back to Mexico City in 2026, and absolutely, for sure, love it there.
Great.
Let's go. Maybe I'll drag Scott. Well, actually, I did drag Scott with me this year, but he didn't speak, he just ate.
I'm good at that.
I can do the same thing.
Right?
All right,
Next
the
person.
Next one.
I sold my restaurant/bar in early 2025, but I'm not sure what to do next. I thought I would buy another business with better hours, but prices are ridiculous. Should I wait out the market or bootstrap something new from scratch? So this guy, I think he was somewhere in Pennsylvania, but I understand. I mean, I've never actually owned and ran a restaurant bar, but he was telling me, it was a long email.
It's a police.
Well, yeah, but this is like the hours were like, he said he was working from, 9 in the morning till midnight,
Yeah.
and he said it was just brutal. No.
We were actually just talking about that business yesterday. Just a tough business.
It is just incredibly tough business, and so I understand that. And he sold it, which is great. The problem is that when he went to buy something else, everything's super inflated right now. There was nothing like that he felt was cheap. So when you're kind of in that situation, do you wait it out, or do you bootstrap something from? And I know nobody knows the answer. I mean, it's subjective.
And I would say, it depends on the situation, but if you have the skill set and the capital to do it, bootstrapping, I mean, that's, as an entrepreneur, that's what we've always done. You bootstrap, you do it. If you can do it without having to pay somebody a premium for their business, that's the direction I would go.
I mean, we're bootstrappers, so we're kind of innovators, creators, like we build stuff. So that would be our choice. But I have a bunch of friends that are operators, and they would buy stuff. So, my operator friends would buy it.
It's a lot longer runway if you're bootstrapping.
Yeah.
A lot longer runway and less certainty.
Yes. We prefer to create. So everything we've done, we've created. For other people I know, they've created nothing, but they just buy everything and they're really good at it.
Yeah, and they're good operators.
Yeah. Let's take a look at the next one. So this person writes, how important is wealth creation and knowing one's worth if you're very happy in your current role, even if you know you're underpaid? An example of this would be this person, I believe was a social worker education thing, and they loved what they do. Absolutely love it. They know that that they're underpaid. They know that they're probably worth more, but they love what they're doing.
So there was a report that I read maybe 6 months ago that said your salary is fourth in importance so long as your other needs are met when talking about how your work environment.
We had a friend that told that to this woman he was dating. Didn't go over big.
So
if you remember.
So
here's where your rank is.
So
number 4.
What's interesting about this, first of all,
I rank number 4 behind all the dogs. That's what I know.
I would say stick to doing what you love. It's way more important. But having said that, if there is a way to try to get a little more money, obviously that's a good thing. And my question would be just about in time, depending on how old you are from a retirement standpoint, are you going to have enough that you will eventually be able to retire?
I mean, in our world here, for the majority of people, which might be whatever, 68%, 84%, whatever percent of you want to talk about, I think that wealth creation and knowing one's worth, is super important. And to know that you're underpaid, it's all super important. But like Scott said, if you're happy, man, why would you ever change? And we have a rule. Now we feel like we've earned this, but we have a rule that if we're not having fun, we're not going to do it anymore. But I think that for other people, there's
that's a luxury.
That's a luxury.
That's a luxury. We know that that's a luxury.
Yeah.
For most people, they're doing something because that's what they've been doing, or they're doing something.
But if you love what you're doing, you're a social worker, you're a nurse, you're a teacher.
Doesn't matter what
you're in the military, whatever it is.
Lucky.
You're lucky. If you love what you're doing,
keep doing it.
You're lucky, man. Just count your blessings and
keep doing it.
That's true.
Keep
but
doing it.
Maybe they can use a little bit of their savings into investing.
Yep. And that's why I'm saying.
And maybe they can pull a lot of.
Maybe they can
pull a lot of.
Not necessarily from their salary, but from investing.
Yeah, maybe they can pull a lot of really good ideas from the show. I mean, that's what we're hoping for.
Right.
We're hoping for, even though,
That's the hope.
there's lots of things you can gain from this.
Really quickly, I'm going to say hola to Milton in Argentina. He just sent a shout out. So, hola.
Hello, Milton.
Sol doesn't know we don't do shout outs yet.
Okay.
Okay. And this is the last one for the mailbag today. Do you think having a lot of jobs over a 5-year period hurts your chances of securing a better job? In other words, how important is loyalty when compared to different experiences?
I feel very strongly about this one.
Go ahead.
It really concerns me. And again, I've said this, I tend not to look at resumes, but one thing I do glance at is how long somebody has been in a particular role. And it alarms me. The red flags go up if I see somebody has moved 3, 4, 5, 6 times in the last, 3, 4, 5, 6 years. If there's a reason that you go from one job to another and that job didn't work for whatever reason you moved, fine, that's explainable. But if all of a sudden you're going from boom to boom to boom in a short period of time, that's concerning to me, as somebody who has interviewed, thousands of people, I would look at that as a negative and a hurdle that you would have to get over.
Would you say
not minimizing getting experience? That's all important, but I don't know how much real experience you're getting in a company if you're not there for a full year, because it takes months just to figure out what the new role is.
So what's a short period of time?
I like to see somebody in a role for at least a year. Now the flip side of that is if somebody has been in a role for 20 years and not at the same company, but I'm saying in the same company, in the same role, because you could be in a company and move to different places within that company. But if somebody's been doing the exact same thing for 10, 15, 20 years, that is a little concerning to me.
Scott and I have, over the last 25 years, literally hired, I would say, a couple thousand people for, between Thinkorswim and Tasty. And I would say the most expensive thing and the biggest risk about hiring anybody is that they leave. Because we spend so much money training. When I say money, what it is people don't reach their peak value. Maybe it's a year after they're there. Maybe it's 2 or 3 years after they're there.
Correct.
And the cost of replacing somebody is ginormous. So one of the things we always used to do is say, one of the reasons we felt we were successful is because nobody ever left. And the great businesses build around the fact that nobody wants to leave. I mean, some people have to leave, but if nobody wants to leave, so loyalty to us is crazy important. And it's not just loyalty, it's, staying around, because it's so expensive to change.
Yeah.
And one of the things, and I will say this, I'm sure, a million times while we're doing this show, if you are in a position of hiring people, not the person trying to get the job, but somebody who's looking to bring somebody in, a bad hire or a wrong hire is 10 times or 100 times worse than not hiring somebody. Because the amount of time, effort, cost, bandwidth that goes into that, and then you got to start over. So be careful when you're working through that process.
All right, now today we are going to do something, before we jump on the phone calls, we're going to do something that we've started to get some feedback. We've only done the show for 2 days. And we appreciate,
So if you think about our third show, there's a 50% increase. It's nice.
It's our third show, yes. And we think about the tens of thousands of people that already checked it out. That is super cool. And we are so appreciative and humbled by that. But we thought we'd give you some of the fun little feedback, okay, that we've heard over just the first 2 days. Because we know a lot of you. Yesterday we talked about Pilates. I don't even know if I spelled Pilates.
Pilates.
Yesterday
it sounds like a dish.
Pilates.
How do you want your Pilates?
Yesterday we had a little chatter about Pilates, so less Pilates chatter and more market talk. I can't unsee the visual of Tom doing Pilates.
It's a reasonable comment. There's an Amazon commercial where a girl comes home. You don't watch TV. The girl comes home from college and she walks into her bedroom and the dad's on a treadmill.
Yeah,
I've seen that one.
Right? Okay.
You can't unsee
You
it.
can't unsee it. That would be Tom and Pilates.
But that is a very fair criticism. What's next? Get a haircut.
A haircut.
I am.
Ooh,
I don't think they're talking about me, but I
All
am
of
getting a
us?
haircut this week.
No. You're contractually not allowed to cut your hair. Me too. So Scott's the only one that can get a haircut.
I'm getting one cut. I'm getting it on Friday.
Let's go next slide. The last thing I want to listen to is more political garbage. Please don't go there. Hey, that's just part of who we are, and you're going to have to take the good with the bad. There's no political talk today. We did a little political rant yesterday. There'll be some political rants going forward. There'll also be some not some. Today we're doing sports. So, that comes with the territory with us. We're political. There'll be some political. You might think it's garbage. Other people might say, hey, it needed to be said. But we love you either way. Okay?
That's true.
Let's go to the next slide. Can we block yours and Scott's video so we can just see Soul?
I second that.
It's a reasonable request.
It's a very
This is not the first time I've ever heard this. So, you could use, Peter, you can use black tape if you have to, but that works for us. We block our trading screens that way.
Or when they're interviewing somebody like the FBI, but they don't want to be shown, they change everything.
It's funny, when I was up, since I got up so early this morning, I made like 25 trades before 6 o'clock this morning. It was insane. That's all I had to do. What do you do at 6 in the morning?
Well, if you had a Peloton, you could get on and ride.
Oh, God.
See, let's get back to this.
Hey, Barrett from Canada. We got Barrett on hold. Barrett, what's going on, man? Did we lose Barrett? I left him on for a long time.
Barrett, are you still there?
All right, we'll come back. Sometimes we just have other stuff to do first. We'll come back to you. Sol, let's give a rundown what we're doing today.
Well, we are going to be discussing, will lower interest rates widen the wealth gap in America? We have different views, so this should be interesting.
Yeah, this has been a topic kind of since the Fed lowered interest rates. I think it was about 2 weeks ago they lowered by 1/4 point, and that was kind of what was predicted for the. That was a little bit about what was predicted, you know, for
markets
Yeah, it
had
was.
that.
It was
markets had a
predicted.
price.
markets have a-
Bonds have stayed at the exact same price. They haven't. They got up to 119 went just before the Fed lowered last time. Now they're trading 117. So they've actually gone down, which means the rates are a little bit higher. So
You know, this is an interesting topic, and what I find fascinating about this is for most people, they go,
Bless you.
They say, for most people, if the Fed lowers 1/4, 1/2, whatever it is, they go, great. I'm being told that this is amazing news. Why?
I don't know what that means.
Right.
To anybody. I don't even know what that means to a trader. But
Right.
yeah.
What does it mean, you know, to have lower interest rates? So I'm going to start this by saying, because when Tom and I first started talking about this, I was looking at it from a slightly different perspective, and my answer was that it's going to have a bigger impact, depending on how we're looking at this, on the lower income people with less disposable income, because borrowing becomes a bigger percentage of their disposable income, the cost of borrowing. But I'll preface this conversation with lower interest rates categorically are better for everybody unless you're in the business of lending money, because if you're in the business of lending money, clearly you want to have higher interest rates because you're making a bigger spread. So the question is, what does this do to the wealth gap? And the answer is it actually widens it. It actually, even though it's better categorically, it's better for everybody because you're spending, hopefully, I don't know, I mean, credit card borrowing, I don't think that they adjust very quickly. So I think they just kind of tend to leave it unless rates go up and then they raise it. But there's the primary reason that lower interest rates are better, have a bigger impact to widen the wealth gap for the people with more money. Is the simple answer is that you have assets will typically go up because you could borrow. If somebody wanted to go buy stocks and borrow money, or somebody wanted to buy real estate, whatever it is, you could borrow. Your borrowing costs are much less expensive. If you have less money, you have less of a chance to be able to go out. You have less of a chance of being involved in the stock market. You have less of a chance of being able to buy a home or buy an investment property, etc. The good news for everybody is that when rates are lower, typically businesses will put more money into research, development, growth, whatever that looks like for the business, which then will translate into hiring, which hopefully with hiring will come slightly higher salaries.
I think in a similar way, but I disagree that we all want lower interest rates. I actually don't like. I actually hated when interest rates went to zero, when they're negative. I actually don't like super low rates. I think there's a happy place in that 3%, 4%, 5% kind of Fed funds rate. I think that super low rates send a very bad message. Super low rates, and you can look at, what's happened in Japan for the last 35 years. You can look at what's happened to the Japanese yen compared to all other world currencies, and you can see like how far, it's basically low rates have destroyed, essentially Japan as a global superpower. I think that you have to be very careful when you talk about, taking rates down dramatically. Lower rates benefit the wealthy more than anybody else, simply because lower rates, just like Scott said, lower rates tend to force asset prices higher, and by forcing asset prices higher, that benefits those with more money. The offset of that is that borrowing rates are cheaper, but really what happens then is corporations borrow cheaper, and individuals, wealthy individuals can borrow cheaper too, so they don't really, not everybody gets to take advantage of lower rates. The other problem with it is with lower rates, people make less money on their money if they're looking for risk-free rates, and so that
bad for retirees.
It's bad for
anybody living on fixed income. It's bad.
It's bad for anybody that measures their returns against risk-free rates.
Right.
And I have long been a proponent of getting people to recognize the concept of risk-free rates, because when you actively trade or when you actively invest, whatever it is, you want to set an objective at some multiple of risk-free rates. So for example, if risk-free rates are 5%, then you want to try to make 20% if you're going to actively manage your money. If risk-free rates are 3%, then you're talking about 12%. Like that's the same ratio.
Think about what we were talking about when you graduated college. In '79, at 76, 77, you had rates around 15%.
Well, when I was in college, I didn't know what rates were because I didn't have any money to borrow.
Okay, but what I'm
money.
saying is that 15%, the S&Ps, I know we've been in a crazy bull market, but S&Ps historically are about 10% a year. So if you could get 10, 12, 15% risk-free, why would you go into the stock market?
Sure, of course. I mean, when I first started my first job out of college at Drexel Burnham, the first trade I made for somebody was buying them 90-day CDs at 20.5%. I mean,
They were wondering if that was a good buy?
Yeah, they were. They were nervous. And, I remember my first mortgage, I got some special deal because they were 16%. I got it down to 14.
So now,
for the first couple of years.
I think it's important to point out that the bond market is so massive that the bond market's going to do what the bond market needs to do regardless of what the Fed does. So if the Fed artificially, and again, Fed rates at zero, and I know people were saying, oh my God, this is amazing, we have to go back to zero. They were so artificially low. Historically, we're in that 4 or 5%. That's where rates historically have been. The problem is that we got used to zero for 3 years, and people are like, oh my God, this is crazy. Rates got back up to 4, 4.5. Now we're back down in the 4 range. But even if the Fed were to go back to zero, it doesn't mean that we are borrowing significantly lower, because it all is going to come down to the risk factor. What is one's ability, whether it's an individual or a business, the ability to pay back the money. So the Fed can try to artificially lower, and it doesn't mean that it's going to necessarily translate across the board.
I guess the message from this segment, which is interest rates and the wealth gap, is don't believe politicians, I wouldn't believe politicians or...
You said you weren't going to get political.
I'm not. I wouldn't believe politicians, or I wouldn't believe financial media when they start talking about lower interest rates are necessarily better for everybody. Because they send the message that lower interest rates benefit people with less more. And the reality is that lower interest rates benefit the wealthy more than they benefit anybody else. Because they push up all asset prices, and the assumption is the wealthy have all the assets. So it actually widens the wealth gap. But I think that there's a happy place. And that's where I think we kind of are now. And based on the fact that bonds haven't moved at all, based on the fact that everything has stayed in a very narrow range for almost 2 years, I think that's, we're kind of in this sweet spot right now. And I strongly urge people over time to maybe trade a 10-year note, maybe trade a 30-year bond, just so you understand how interest rates move. I mean, the largest traded product in the debt market is the SOFR contract, which is the new euro-dollar contract, which trades massively, but retail investors can't trade it. It doesn't trade for retail. But, I mean, just knowing that's out there, that's kind of like the short-term paper. Anyway, I think it's important to understand things like yield curve. It's important to understand things like interest rates. It's important to understand how this moves and what this does or doesn't do for you. But we are in that sweet spot right now, as witnessed by the market at all-time highs, as witnessed by a mixed but fairly overall strong economy. All right, we're going to keep moving ahead. Now we've got, I promised some people we'd take a couple of calls. So we're going to go back to Barrett, and then we see you on, Eric. We'll go to you in a second. Barrett, what's up, man? Try again.
Or let's try Eric.
All right.
from Omaha.
Barrett?
How
No?
about Eric from Omaha?
All right, we'll try Eric. Sorry, guys, we're still working on our phone systems. Hey, Eric.
Okay.
Remember, it's 312-448-7032.
Yeah, our phones are on all the time, except when we can't figure out how to use them. But we will figure that out. It's an all new setup. It's a new production team, everything. So we're figuring it out. Everybody here is awesome. We'll get it done. Hey guys, any chance or no?
Peter?
All right.
Give us one sec here. Eric, could you talk once more?
See that voice? That's the voice from behind the curtain.
There you go.
That's right.
No, unfortunately, Peter, we do not hear him.
Copy that. We'll try and figure this out.
Okay.
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 Guys,
on.
so sorry. We'll move on. Just take a little bit of a short break, and we'll come back to you if
I think
you
we're
can.
going to like this one.
All right. Well, every day we like to do a little rant, and today I decided to do something on sports. It's
Like
right
it.
up your alley.
Like it.
Is the prop bet a cancer in the clubhouse?
Why don't you? Yeah, I hope you're going to explain what a prop bet is.
Well, I think most people understand that there's this. Today I'm going to focus on betting, on sports betting, and I'm going to focus on like different kinds of funky sports betting options, like parlays or like 2 or 3 sided bets, things like that, or just funky little bets. Not
As opposed to just saying, I think this team's going to win. Here are the points.
Yeah, not like a micro strategy where you're going, not micro strategy of the company, but not like a micro strategy betting situation where you're trying to, buy something in the first inning and sell it in the second inning, or buy something in the first quarter, sell it in the second quarter. This is more a discussion about multi-leg parlays, where you're betting on multiple things have to happen to win. So the reason is you risk a little to make a lot. And I think it's become a big topic recently, because the question is sports betting and is sports in general, have they been compromised? So anyway, that's this. Hi, I'm Tom Sosnoff, and I have a bone to pick with the proliferation of prop and parlay betting in live sports. So what's wrong with betting? Nothing, as long as everything remains kosher. But the recent headlines out of the NBA and Major League Baseball suggest that certain professional sports have been compromised by prop and parlay betting. First, some well-known basketball players and coaches got arrested for fixing games. Then it's the indictment of 2 Major League Baseball pitchers for fixing pitch counts. I love watching college and professional sports, particularly our Chicago teams, Bears, Bulls, Hawks, Cubs. But spending north of $1,000, and that's probably cheap, to take your family to a professional sporting event only to find out that it may be nothing more than another version of professional wrestling is not acceptable. I'm sorry, but there is zero chance that Dick Butkus or Walter Payton were ever compromised. Same with Michael Jordan or Blackhawks captain Johnny Taves. I will never believe that, even for a second. Pete Rose bet on baseball, but I don't believe he compromised his team. But now, legal parlay betting allows you to risk a little to win a lot. DraftKings, FanDuel, and all the other betting sites have an obligation to keep sports clean. Leaving surveillance to the casinos has never worked well. Even so, this is not a good look. And remember, professional sports leagues are literal cash machines. Nobody is buying a professional football franchise for $8 billion only to find out that your number 1 wide receiver bet the under in a 4-way parlay. So how do you fix this? when the owners are all greedy and recognize that without gambling, their viewership, attendance, and sponsorship revenues will drop off dramatically. There's only one way to fix it. The betting platforms need to follow the money. That means limit credit card money movement, limit bet size for multi-leg parlays, lower the fees, and make better markets. Factor in the new competition from prediction markets. And this is why DraftKings and Caesar stocks are trading at multi-year lows. If you saw the other day, DraftKings, I think, was trading under $30. And I think Caesars is at a multi-year low.
So I'm fascinated by this. I'm on DraftKings. I mean, for fun. I'm not a big sports bettor. And I love the ability. What I love about the app is, or any of these apps, is what you just said. It's that in-game stuff. So it's not just like you're betting a game, because it moves. The lines are constantly moving. I think all that's great. Jeff and I were talking the other day when it came out about the two Guardian pitchers that are accused of betting on themselves and taking the over on the number of pitch count. And I said, what do you do? Like, how can you prove that somebody did that other than your comment of following the money, saying, look, somebody made a big bet on this? I mean, you have to be a complete degenerate if you're betting on a particular pitcher and their pitch count. Either you know something or you're a complete degenerate.
Well, most people are complete degenerates.
Okay, but what they did quickly, they came out and capped parlay bets with something like pitch count.
I just said limit betting.
Which they did.
Betting, yeah.
Okay, so they know that they have a problem, but is limiting it to $200. Again, your comment, perception can become reality in a half a second in anything. And if fans start to think, as you said, am I watching something that's rigged or fixed? What's the point?
If professional sports is compromised at all, and again, you're leaving. Now, I'm not suggesting that we need government regulation of professional sports, but like when you have listed markets people trade on, which is 1,000 times bigger than sports betting markets, there is like this crazy surveillance requirements to make sure nobody's gaming the system.
That's right.
In this world, the only reason they caught these guys is because DraftKings has some surveillance, and they caught them a little. They caught them, but that's how they caught Chauncey Billups and those other guys. But even so,
what are these guys even making on this? Which is
it
so
makes no
insane.
sense.
It makes no
Ridiculous.
sense. They're making millions of dollars playing a game, and then what are they trying to make? 10 grand or 20 grand?
It's the sport. It's beating the system. It's the sport part. But here's how crazy. This is how important sports betting is. Like, in the new stadiums they just built, I think where the Clippers play, they have it built into your seat.
That you can bet?
Yeah, the seat in front of you. You can bet like literally right on the casino. Like they have all these games built into a screen that's directly in front of your seat.
And I love then they have the 800 number if you have a gambling problem, like you
Right.
call this number. So I will go on, and I know you're going to say there is no. So here, take a step back. The reason that sports betting is allowed in some of these states is because they're saying it's a skill game. I'm not really sure where the skill comes in when the markets are this wide. You know, when you're edge, there is no edge. It's like, you know, you're just making.
Well, the prediction markets.
The prediction markets are much better.
They're better, but they're still horrible. I'll give everybody an example. I've done this example many times in live events, but the sports betting markets are about 10% wide.
That's low.
I mean, they're
it's the low end.
They're at least 10% wide. I'll give you the low end. And on $100,000, that's $10,000 of drag or vig, whatever you want to call it. And that drag makes it virtually impossible to be a winner betting on sports. Over time. It's virtually impossible. Now, are there some? Yeah, there's a few people. There's a handful. It's probably a tiny percentage, like 2, 3, 4%. When you talk about casino markets, their edge is a little bit less, but not dramatically. They like to say it's like 2 or 3% or 1.8%, but it's really more like 5 to 7%. When you talk about prediction markets, which is the new kind of crazy fad, prediction markets, especially betting on sports and stuff, because they're binary, are 1% wide. So on $100,000, that's $1,000. But if you want to buy $100,000 of spiders, okay, SPY, the ETF, that market is a penny wide, which comes out to $1. So let's say $2 wide. So you have 10,000 for sports betting, you have 1,000 for prediction markets, or 5,000 for casinos, 1,000 for prediction markets, and $2 for the stock market.
And people were vilifying, the Citadels of the world for,
Right.
for stealing when they're taking that kind of risk, and everybody's fine with the casino or.
But that's why the stock market is, and the bond market is, 50 to 150 trillion. Nobody really knows exactly because of all the OTC markets. But let's say 50 to 150 trillion, and that's why the sports betting market is a few tens of billions.
Right.
It's the difference between the two marketplaces is just incredible. All right. Want to give it one more shot for these calls or not, Peter?
Not at the moment. We're still figuring it out, but I don't think it's working immediately speaking.
Okay. Then do me a favor, kill your mic because there's a little bleed. All right? Perfect. All right.
Next up.
That was fun. I like the sports betting. I like compromising the integrity of sports betting because a lot has happened recently.
We're going to take a poll, see what people think.
Well, they better get on this quickly because it's a slippery slope.
Slippery slope.
Very slippery.
On Words of Wisdom, we'll discuss success is earned. Got it?
Yeah.
Let's do it.
I got it.
Let's do it.
This is important because I think people sometimes think that success is like, okay, I had a great idea, or success is kind of handed to you. There's a lot of different things that way.
Put in the work.
I don't think anybody realizes that's a good picture.
It's a great picture, and we got to put that up because that dog's lifting more than you could ever possibly lift.
Ever.
But talk about anybody that has worked for me. I am sure will say that they've heard me say this, a million times. One of my favorite comments is, if this was easy, everybody would do it.
That's right.
And it's not. And the people, regardless of what it is, the people that are great at what they do make it look easy, like that dog. Is that a headband on the dog too? That's awesome.
Yes, it is.
So, people who are great, and going back to sports, you look at how easy, the best of the best make it look, but it's not. And a lot of effort, time goes into it. So if you have an idea, and going back, you have an idea, that's great, but then what do you do with it? And that's where the effort really comes in.
Yeah, I always I have a crazy amount of respect for people that build really successful things because I know how hard it is. You got to remember, like, the success rate's a fraction of a percent, especially, and to get to unicorn status, it's like even less than that. So when people say, "Oh, that guy, that person got lucky," I'm like, that's such a bunch of crap, because nobody gets lucky. I mean, it's
you need a little luck.
You can have luck. Things can fall your way.
Correct, but that's different than being lucky. And,
Yeah.
And for those going back to the sports or anything else, the analogy, luck factors out over time. So, I'll take skill over luck any day of the week.
Yeah, and I don't even know how much it's like. A lot of times it's just hard work. It's passion. You have to outwork everybody.
That's right.
Yeah. It's a skill. Being willing to do that. That's a skill.
So we have a bunch of different things on successes earned. So let's see what else we got here. So a lot of times, we will, a lot of times we'll look for certain traits in people. Like we talked about it earlier. There's a loyalty trait. There's, a common sense trait. There's the ability to be likable. We look for, people that are humble. But I think that also, and this gets back to the whole thing about this starts in high school. Like, where do you end up in college? How hard do you work through that process? How much do you learn? We will never, ever discount smarts. That's a non-starter for us.
Right.
That doesn't mean, yes, we will occasionally take somebody that did not go to college.
But there's a difference. They could still be plenty smart if
Of course.
you go to college, as long as you're trainable, you're willing to learn. And that's.
But a lot of people discount smarts for other things. We will never do that. We have always said that a lot of our successes came because we hired a lot of really smart people.
Surrounded by the right people.
Yeah, you have to surround yourself. Like if I surround myself with my own friends, I have no chance for
no one.
success. Yeah, because you're just the average of your own friends. You know, like so if Scott and I just surrounded ourselves with all our own friends, we'd be like, I don't know where we'd be right now. It wouldn't be good.
Should we start going down the list?
No, I'm not going to go down the list publicly, but it wouldn't be good. And so there was a point where you don't get rid of your friends. Okay, that's not what we're saying at all. But what we are saying is there's a point where you have to take other kinds of risk. You have to talk to other people. You have to recognize that you don't know everything. You might think you know everything, but you realize
it's a critical.
We needed to surround ourselves with smart people. And sometimes you surround yourself with really smart people and it just doesn't work out because you're just not compatible. There's not a fit. But you have to start, you have to have the goods to build something. I mean, I don't think you could argue this. It's all yours.
Okay. This is a really, really important one. And I think this is where a lot of people stumble, where it's don't outthink yourself and go too broad. So we have had multiple businesses and some more successful than others. And I think for most people, the problem is when they start expanding their lane. So you have a lane, you have an idea. And I'm not saying that you don't iterate on the idea. We are amazing. We've talked about it. You know how quickly we will pivot. Pivoting to me is not expanding the lane and going too large, too wide. But for us, we've always found something that we felt fit what our desire was, and we went straight at that. Again, moving along the way, but we stayed within our lane. And I think, perfect example, one that just kept coming up year after year after year from when we started Thinkorswim, in the very early 2000s, we were never self-clearing. So we always had another clearing business, a business that we used to do the clearing. And we would always get asked the question, when are you going self-clearing? Tom and I always give the answer, it's not our lane. We're going to let somebody else do that. It made sense for us to negotiate in such a way that we felt that the deal was sufficient, it was a good deal, and that we pay somebody else to do that side of the business for us and let us go grow the business. Could we have done it? Of course we could have done it. Would it have? Well, I think we could have done it. We never tried. But I believe we could have done it, but would it have been the right idea? So stay within your bounds.
Go back. So I also, this is kind of like this particular bullet point, it's something that I have really focused on in the last, 25 plus years. And I've probably done, I'm going to guess, close to 2,000 interviews, through this bootstrapping segment we did for 15 years and through lots of other, just webinars and talks and things like that. Most people who start a business fail because they're thinking about too much stuff. I can do this, I can do this, I can do this, I can do this, and it goes on, and the list never stops. And you could do all that stuff, but you haven't done any of it yet, and none of it, you've been successful at none of it. And that's why most businesses fail. They go way too wide, way too broad. They try to take in way too many things. The most successful way to develop your own skill set, and before you think, well, I got to develop all these different skill sets, not really. You have to be able to do one thing or two things really well, and then you can kind of broaden what you do. Scott and I were talking to a young entrepreneur, I think it was like last weekend, and it's a company that we've made a small investment in. And one of the things he said is, well, as soon as we get this done, I can do this and this. And he lists off 4 things. I'm like, oh, slow down your roll, okay? You haven't done anything yet. First, let's figure out your core business before you start worrying about all these other businesses.
He's excited.
He's excited.
And there's nothing wrong with being excited, and there's nothing wrong with having the ideas. Just wait and give yourself time before you start tackling the new challenges.
When we built Tasty, I'm just going to go back a little bit because I think it's important to give you a little of our history. When we built Tasty, we wanted to be a digital financial network that was different. And so we never even thought about building a brokerage firm. We spent 6 years just building Tasty. We spent 6 years just trying to be like, build this network. And then at some point we're like, okay, now we have to broaden our model and build a brokerage firm around it. And so it's not like we were thinking from the start, we were just thinking, how do we build a financial media network, a digital financial media network? We didn't know anything about digital financial media. When we built Thinkorswim,
We didn't know anything about building a brokerage.
we didn't know anything about building technology, let alone a brokerage firm. But we had a couple of different ideas. We were going to build options on anything. We were going to build a money management. We were basically going to build a money management mechanism or technology that would be kind of like all user defined, and it would have been kind of the first of its kind. But as soon as we started building the technology, we're like, you know what? We better focus on our lane. And we never even looked at that other stuff again. We thought about it, and then once we decided on what we're going to build, we just went straight for what we're going to do. And that obviously we obsessed about that for the next 10 years. But I think it's really important, and way too many people think way too broad.
Pick a lane.
Pick a lane.
Fine, stay in it.
So this is something that I start off all of my the webinars and seminars that I do about success and building businesses and becoming a great trader and everything else. It's everything in life is just a game of longevity. The difference between person A and person B and person C and D, E, F, and everything else is very small. It's a marginal difference. It's like in baseball, they used to say the difference between hitting 280 and 240 is a couple of bloop singles. It's a couple of just crappy hits where the ball snuck through the middle, or you bloop something into right field, whatever it is. In the world of success, the difference between person A being successful and person B not being successful is longevity. And I mean, we are the perfect example. 20 years just building up a skill set, and then 25 more years figuring out, how to monetize that skill set into multiple unicorns. That is a game of longevity. I mean, Warren Buffett, same thing, slightly different in the sense that, he was a money manager, not building technology. But between the last 20 years, he made, I think, something like 50 times more money than he made in the first 30 or 40 years. And so it's just a game of longevity. Now, some people go, well, that doesn't make any sense. I don't want to be doing this. I'm 23 now. I don't want to be doing this when I'm 63. Tough shit. I mean, for the most part.
But wait a minute.
No, for the most part. I mean, listen, there are some 23-year-olds that build really cool stuff. But for the most part, they're not.
But you also don't know in your 20s what you're ultimately going to do.
Of course not.
So gaining the knowledge, gaining the information to allow you to move forward. You might not have an idea right now that might come to you in 2, 3, 4, 5 years. And that goes back to the networking that we were talking about the other day. How critical that is. And the conversation that we had with somebody 5 years ago, and now 5 years went by, and now we're having another conversation. So this is all building blocks to get, I think, to the same message. For me, when I think of longevity, I think of athletes. And when I think of an athlete, and I don't know why the two people come to mind, Tom Brady and LeBron James, that how long they did it and that they stayed. And I mean, LeBron James is a freak. I think he's probably done or soon to be done. But I mean, a freak of nature to say that he's been able to do in a competitive league like, the NBA.
Well, Brady won a Super Bowl when he was 45.
That's right. Freak.
That's freak.
Freak. So, but to me, that, if somebody said define ultimate greatness, to me, it requires doing something at a high level for a long period of time.
That's why getting into the Hall of Fame, you can't, in any sport, you can't do it. You can't do it in a year.
Kerry Wood, 19 strikeouts. Or 21,
Doesn't matter.
Doesn't matter. It's one game.
But I mean, in the business world, it's all about longevity.
That's right.
That's it. I mean, success, the difference between person A and person B, it's so marginal. And everybody's smart. And, you know, I mean, that's one of the things I've learned. Don't sell people short. Everybody's smart. So it really is just a game of longevity. And some people don't have what it takes to go the distance, and other people are like, hey, that's what I'm going to do.
The resistance. Okay.
So
Look at this doggy.
That's a cute one, too.
I thought of Max. Wouldn't jump in the pool.
So never shy away from risk. I mean, that's something I could say that Scott and I have never done, shy away from risk. I mean, maybe I think there's been times when we probably should have shied away from some risk, but we have been very careful in the last 35 or 37 years to basically, and I love telling the story, every single time we had an opportunity to take risk and we thought probabilistically it was something we should do, we did it.
Some work better than others.
Yeah, a lot of it didn't work.
Yeah. Don't be afraid. I said this, I made the comment to the woman that said, you know, what if she fails? And, you know, comment that I like is, don't be afraid of monsters under your bed. So take the risk.
I hate monsters under my bed. I seriously do. That's not risk.
No. What I'm saying is monsters under the bed stop people from taking risk. Because if they think, like, if I do this, something bad's going to happen. Take the risk, again, so long as it's probabilistic, and take the risk and make sure you
They
can.
don't exist.
Make
That's fine.
sure that you can.
I don't go to my basement because there's monsters in there, but that
And they're
doesn't
coming
stop me
out
from
with-
taking risk.
Did you watch Monsters Inc.?
No.
Great movie. Did you watch Monsters?
Great movie.
Scare? Great. Okay. You got to watch Monsters Inc. That's your homework. You don't have streaming service. We'll have to figure that out. They're
So
coming
we
out with
have
Toy
to do
Story 5, which you probably didn't see 1, 2, 3, or 4.
I saw some of them. I don't remember which ones.
Anyway, coming back to this, and we will talk about this time and time again,
Yes.
how critical it is to take risk. Calculated risk and risk, you know, that's appropriate for you.
I mean, I can't tell you how many times people have said, people either we work with or people that we live with have said, what are you doing? And I'm like, don't do that. And I'm like, we're doing it. And it's just, you know.
It's our personalities.
Yep.
But yes. And then this
Next up, own your decisions.
Absolutely. You have to own your decisions, and if they fail, they fail. Take credit for them when they work, and if they don't work, take ownership of it. And again,
Learn the lessons.
Learn lessons, and there's nothing wrong
Move on.
with failing. Most people are afraid to fail because they think
Right.
it will reflect, from a psychological standpoint, they think it will reflect negatively on them. I don't look at that at all. So long as you learn something and you say, listen, at least you tried. Most people are afraid to try. So at least if you tried and it failed, and if you learned something and you build off of that, that's so much more important than having never tried.
There's always a lesson in there.
Always.
I
But you have
think-
to learn what the lesson is.
Right.
I think people are coming to terms with owning their decisions. Like in sports, you hear more coaches say, I screwed up, you know, that was my decision. I think in business, you start to hear more people accept, you know, I think if you want somebody to say, hey, you did an amazing job, then you better own all the times that you screw up. And I think one of the things that we've done well is we have owned our bad trades. And I think that that's totally cool. I think people that don't own their bad decisions are weak. And I think people that don't own their bad decisions are not necessarily very successful. So I think good business people, I think people that are confident, I think people that show that they have a lot of upside, they own the bad crap because then they get the good stuff. And I think that's super important.
Yes.
All right. So every day when we finish up this segment, which is a very important, it's kind of like the meat of our show, is our Words of Wisdom segment. But we also like to end it with giving you a sneak look at different pieces of the software that we're building. the first day we showed you how we're kind of just displaying, value and potential and things like that. The second day we showed you our live data feed. Now today we're showing you something that we've embedded inside of our software, which is a skills diagram. And the objective here, and it might be a little hard to read, but the objective here is to essentially fill out the diagram with, and by the more information that you give us, what we've done is we've essentially coded it and automated it so we can take just a simple like resume or any information that you give us and really give it kind of an intelligent way to break down your skill set and to show you where you should be focusing or where you could be focusing and where you're weakest. Like our goal is not just to show you everything that you're great at, it's also to show you different things that you might be weak at. And the software has like 10 different types of diagrams and we're going to show you all of them over the next couple of weeks just to give you an idea of kind of what's embedded inside of our technology that's going to make you stronger. We're going to give you technological takeaways and we're going to give you lots of content-based takeaways on the network and then lots of technological takeaways on our software. And our hope is it makes everybody stronger. I mean, when I say everybody, I mean everybody that's part of the Lossdog community.
That's right.
All right.
Heck. All
now,
right.
we like to end the show each day, and this is
Last
about,
but not least.
yeah, we're going on that 75-minute, show pace right now, which is really good for us.
Mm-hmm.
But we are, like I said, I got up at 3:30 this morning, way too early, because I'm doing something. And so I've been trading since early this morning. And we're going to, over time, talk more and more about, people keep saying, hey, talk more about markets, and we will. But we're not going to talk about trading. That's one of the promises we made. We're not going to talk about like, hey, we do this trade, hey, we do that trade, that kind of thing. We're not going to talk about trading at all. But we think it's super critical that you have an understanding of markets because a lot of what we talk about on this network is building equity in yourself. And you have to understand how that works. Like we talked about interest rates today. You have to understand how interest rates work. If you're going to, one of the things our software does is it shows you basically, it shows how much equity people have in the companies they work for. We've done, oh my God, like we've researched millions of data points to figure out like what everybody kind of owns in the companies they work for, what they should strive for. And it's super interesting. So I think all of that ties back into listed markets so you understand kind of how to take risk, how to be probabilistic, how to understand statistics, and also to know what we're talking about when we talk about different things.
And what's amazing is, because we haven't looked at this in an hour and 15 minutes, and basically SPOOs, this is where SPOOs were. They're down $6 right now. NASDAQ's a little bit lower, down 100. Gold is higher. Gold's over 4,200 again, up 88. Silver is moving up also 53, up 2.5. And you got crypto's off a little bit, not a lot.
Yeah, it's funny. I woke up early this morning. I'm like, all right, well, I had to do this hit on CNBC, and I'm like, fine. So afterwards, I'm like, okay, well, first trade I made was same trade I make every day. Sell some S&P futures. I'm like, okay.
One day it'll work.
Well, I did those overnight too, and then I sold some, and it did work today. They were up 20 or something.
Yep.
I mean, I was selling them at they're 68, 66. I was selling them at 92, 93, 94 in that range.
90, yeah.
Yeah, 68. So like 30 points higher.
Yeah.
But I scalping them, and then selling some Nasdaq futures, which were about 200 points higher. That was the best trade. But then I also sold some silver. That did not work. Not working. Up about $2. That did not work. It's up $2.60 now. I'm looking at that gold silver ratio because that's just interesting to me. And haven't traded any bonds yet today. But people ask like, what are you guys doing in the markets now? And I think it's fun for us to just give you kind of a brief overview. And I'll tell you kind of exactly what my positions are. Right now, I am long the Japanese yen, which is on its butt. It was down overnight. I don't know exactly what it's doing now, but it was down overnight. And so I'm short some puts in the Japanese yen. I'm also long some bonds, small, not big. If the bonds drop another point or so here, I'll buy some more. We're short some NASDAQ futures and deltas. We're short some S&Ps. When I say we, I mean me. And as far as individual stocks go, I've been buying a few and shorting a few. I've been buying some of the stocks that are oversold.
AMD?
No. I've been buying ENPH. I've been buying Chipotle, even though I hate ENPH and hate Chipotle. DraftKings. I'm just trying to think. Those are all $30 stocks that are on their butts. I haven't looked at Caesars until we did the piece today, so maybe I'll do that. That's what this is good for. And on the short side, that's where the problems are. Short AMD, which was up huge this morning. Their CEO came out and said it's going to be up 35% a year for the next 150 years. I think she's talking her position, but whatever. Short some AMD, short some MU, short some NVIDIA. Let me think what else. That's probably it. I have a lot of positions on, but those are the kind of the big ones that I can think of off the top of my head. Short some Roblox.
Close.
Looking to get short some Reddit.
It's a hard stock to trade.
I hate Reddit.
It's a hard stock to trade.
Yeah. But just to show you, I mean, I'm still a junkie. I'm still very active, and I still love it. But I just want to talk about different things on One Lucky Dog.
Correct.
What about you? You're being awfully quiet.
No. My positions are similar. I don't have.
I don't have
the current.
Are similar to mine.
Yeah, I don't have currencies of bonds. I'm short some calls and stocks that you were talking about. Short a little gold, short a little silver. Don't have a.
Should you buy Bitcoin here at 100?
I would not.
101,000.
I would not touch Bitcoin here. I mean, I would.
I'm a buyer.
You're
I'm a buyer if it dips into the 90s.
I'm not a buyer.
And I'm a buyer of ETH. It's like, I think it's like 3,400 now.
34.14.
Okay, so I'm a buyer in the 31, 32 range. I don't know why.
I not a buyer. I fear that there's going to be a day or two in here that are not going to go well for crypto, but we'll see.
A big mover today is, which was interesting because yesterday crude oil was up big. Today's down 230.
Down. I mean, 58. I think it was $58.
Yeah, I don't have a position on
65. That's
Yeah,
getting down there.
I don't have a position on in crude oil, but being down 5% in one day or 4%.
And I mean, at $58. Low. I mean, that's getting down there.
You see, when you drive an electric car, you don't care anymore.
That's true.
If you're driving a gas guzzler like you, sure. But if you drive an electric car,
for you, your commute is all of about 5 blocks. So
yes.
you could ride a bicycle.
I can ride. If I only go back and forth to work, I can use my electric car.
Well, how much does it degrade if it just sits?
It doesn't.
Doesn't?
No.
Oh, so you're good for about a year.
Yeah, probably. I mean, barely. Like not even a mile.
I don't believe this.
You don't believe what?
That it doesn't degrade.
It doesn't. I mean, over a week, maybe like 1%.
If it just sat there?
If it just sits there, nothing.
Very good.
That is.
Yeah, it's nothing. So it just, it's nothing.
3 minutes door to door.
3 minutes.
3 minutes door to door is
Nice.
Nice.
that's nice.
In Chicago traffic, that's unheard of.
And if you're 3 minutes, I'm 2 minutes.
No, you're 3 minutes.
Oh, I'm 3
about
minutes.
6 minutes.
You're 6
door
minutes.
to door.
Oh, okay. Anyway, it is 11:15 Central Time. We are in Chicago, on the north side of Chicago, in our brand new Lossdog studios, and really excited to be broadcasting to you 3 days a week, Monday, Tuesday, Wednesday. I hope you enjoyed this whole week. I mean, we have a few bugs. You could see their phone lines didn't work today. So sorry about that.
Sorry about that. Try us again.
Yeah, Barrett, Eric, and everybody else that was on hold today. I think there was like probably 10 people on hold. We apologize, and next week we'll work out all the kinks. It takes a little bit, but after 3 days, I feel like we've been doing this for years. Well, Scott and I actually have been doing this for
You
years.
have. Yes.
Yes. But,
Right.
but Sully, you fit right in.
Why, thank you.
Yes.
So if you haven't done it, please go sign up at lossdog.com.
Yeah, our wait list is it's super important. The first 100,000 people are going to get something very special from us, and so Yeah, please sign up,
So go sign up.
lossdog.com.
And call us tomorrow. Not tomorrow, Monday.
Monday. Ciao for now.
All right, thank you.
Bye. Thank you. Have a great day.